Now, until small and medium-sized businesses start hiring, unemployment will look to remain high. So what's the outlook for the driver of their economic performance? Let's turn now to Dale Kluga. He's the head of Cobra Capital. He's been working with small and mid-sized businesses. And the story, Dale, it's not pretty, right?
No, it's not pretty, and it's getting worse.
What's going on? Is there no credit for small and mid-sized businesses?
Yeah, I think even the bankers admit themselves, if you take a look at the Fed report in July, they themselves admit that they're curtailing credit to small and medium-sized businesses. So it's not just my opinion anymore. They're in consensus that they're doing this, and it doesn't look like they're going to really provide any more credit until well into 2010 and perhaps 2011. So it's going to get much worse.
Talk a little bit about things like spreads on loans and over the cost of funds right now. What's that telling you?
Well, what it tells me is that the big banks, the big zombie banks, continue to hoard cash, and even with that cost of funds at 0%, they're not lending out money. So it's a fantasy to believe that the zombie big banks will earn their way out of this crisis because they have to lend in order to get out of this crisis, and they are simply not lending. So it makes it much more difficult for the rest of us in terms of not being funded by the government and having to compete with 0% interest rates. So ultimately you would think the customer would benefit from the big banks having this low cost of funds, but in effect what's happening is they're not lending the money to the small and mid-sized companies, at least the big banks are not. And so the beneficiaries are not feeling any of that benefit of the plans.
So what's happening to things even like commercial and industrial loans? What's the appetite out there?
I think the appetite is strong for small and mid-sized companies. I think there's numerous articles in the press that demonstrate the fact that despite what the banks proclaim that there's weak demand, there is not weak demand on behalf of small and mid-sized companies. There is perhaps weak demand on part of the publicly traded large companies that don't need bank credit, but it's a total fallacy, and I do not believe anything that's coming out of the big bank press releases that they're saying there's weak loan demand in small and mid-sized companies. The International Franchise Association says it like it is, and the president clearly stated that there is incredible demand on behalf of small business. It's the banks that are distorting this view.
So what about credit lines right now? I mean, you have experience with small and mid-sized businesses. Are they seeing their credit lines being pulled?
Absolutely. Particularly in the non-bank finance industry, you can see in the July Fed Reserve report that the banks are pulling those lines. They have pulled back. Some 30 to 40% of the big banks have reduced credit to financial services companies, primarily non-bank financials. So the credit crunch is just not on the non-financial small and mid-sized companies. The credit crunch is on my industry, the non-bank financials.
What about premiums? Are they charging a premium right now for riskier loans? Are we seeing that? Is that what's going to bolster bank balance sheets and profit statements?
Well, I hope we can see some lending. I'm not seeing any lending to small and mid-sized business of any material level. So, I don't see it happening yet. However, those that are lending, perhaps the ones that have taken the TARP money do have this artificially low minimum interest rate that's tied into their cost of capital with the TARP money. So if you have a credit line that's priced at prime minus a half, it's irrelevant because they have all announced the minimum charges of their preferred stock dividend, the 5% amount. So we're not feeling the benefit of the TARP money that is really not properly being allocated out to the banks.
Are you feeling the more strict, the sort of strict lending covenants? Are you finding that the standards for small and medium-sized businesses are getting even tighter?
Absolutely. And the July Federal Reserve Senior Loan Officer Survey demonstrates that. It's very clear. It's right in the report. And they are increasing the cost of credit lines. They're increasing spreads, and they're making it more difficult with more onerous covenants. So these are the bankers expressing this perspective. This is not just my opinion. This is factual information that came out of the survey.
So what about the tolerance for risk? Are you seeing that just disappear completely?
Well, in the small and mid-sized businesses, I'm not seeing any lending. I'm not seeing it happening. I'm seeing a lot of banks announcing that they have these initiatives to help banks, but when you drill down, you see that it's a very immaterial portion of their bank assets. So I don't see anything improving since last time we talked about this topic on your last show, Pim.
Dale Kluga, last question for you. How long can small and mid-sized businesses hang on?
That's a very difficult question. I would say it's if something doesn't happen within the next 6 to 9 months, we're going to have unemployment numbers that far exceed anyone's expectations next year.
All right, a very sobering view of the world for small and mid-sized businesses. I want to thank you very much, Dale Kluga, coming to us from Cobra Capital in Chicago. Coming up, we've got David Dempscher. He is the chairman and the CEO of Core Labs. We're going to drill down with him into why his company is benefiting from shale natural gas as well as new exploration for oil.